We all want to have a comfortable retirement, but to make that possible, you need substantial wealth. If you're in your 20s or 30s, you are fortunate. By starting early and with a bit of regular investment, you can set yourself up for a comfortable retirement when the time comes. Let me illustrate with an example. In this example, I will highlight the importance of early investing instead of later investing. If, for example, you start by investing $300 every month when you turn 20 years old, if you hold quality equities that gives you a 10% interest rate, compound it yearly until you are 65. After 35 years, what you would have in your balance is $1,158,274. That's awesome, isn't it? However, if you started much later, at 4 to 5 years, with the same recurring deposit amount and yearly interest rate, you would have $231,907 as your future investment value. In summary, starting early is essential. For many people, this is the best way to grow wealth after factoring in inflation. But first, you start early and start small. Then you have such a massive savings for retirement. This video will focus on 10 profitable assets. You should invest in these assets when you are young. I will encourage you to watch the video till the end. Also, please give a thumbs up, don't forget to subscribe and turn on notifications. Let's begin with the 10 assets you can invest in early. However, in this video, pay special attention to asset number 2. Trust me, it is the hottest investment at the moment. I helped a couple of people make millions just by following my advice and investing in it. You don't want to miss out on what I have to say. Asset number 1. Index funds. Investing in stocks is a sure way to gain early wealth. Despite the high risks, they have great returns. Furthermore, with stocks, you learn along the way. The return rate for stocks has generally been around 10 to 12%, with the S&P 500 as the benchmark. You can compare a few investment options to investing in stocks and index funds. Also, you can throw bonds into your index fund portfolio. Bonds have lower risks and low return rates, but they are very secure. Let your portfolio have about 10 to 20% of bonds in it. This gives it a high sense of security. Then, based on your risk appetite, you can gradually lower the percentage of bonds you own. Another index fund that can go into your portfolio is the crypto index fund. Despite being a new player in the investment space, they give great returns. For example, some cryptocurrency investments can give you 15% each year. But as always, the higher the returns, the greater the risks. Always look out for index funds with low fees. Fees can eat into your returns. While index funds offer an excellent way to diversify your investments, they can be marred by high fees. Also, ask about the tax implications of any index fund you want to invest in. Asset number 2. Real estate. Real estate is always a sure bet, because housing supply will always fall short of demand, and real estate assets continually appreciate. Real estate investment always gives you regular returns. I recommend that you purchase your own home while investing in real estate. This will ensure you reduce your rental expenses. Then, invest in commercial properties such as multi-unit homes and offices. Some crowdfunding platforms help those who cannot invest directly in real estate. These platforms collect various contributions, even those as little as $500, pool them, and use them to invest in real estate properties. We call these investments real estate investment trusts, or REITs. Asset number 3. Education. This is your best time to get educated if you are young. It is the best way to ensure you are successful in life. But your education should be the right one. Getting educated on a hobby is different from getting an education to have a skill. Skill-based education is the right kind of asset for young people. Look for careers employers are interested in and choose something you would love to do. Also, this is the best time to get some financial literacy education. I'd appreciate it if you could take a moment to hit the like button. Your support will enable me to continue producing such useful content. If you have already liked my video and subscribed to my channel, that's awesome. Thank you. Now let's get back to the video. Asset number 4. Invest in startups. Returns from startup businesses are unlimited. Invest in them at an early age. You can also create your own startup. At your young age, It is the right time to start one. Even if it might not be the next Apple, success in a startup gives you explosive wealth growth. Sometimes you do not have to be the founder of the business. You can acquire equity by investing in an idea from someone else. Many young people become angel investors with great returns. If the founder knows you, you could give the business a loan and make it a convertible note. You should also explore participating in crowdfunding sites with startup businesses. Most of these startups have high growth potential, but ensure you know about the company before putting your money into the site. Read as much as you can about the founder. Also, read the mission and vision of the company. Companies with solid storylines usually do well, along with founders with experience and industry training. You could also explore being a venture capitalist, but being an accredited investor with a venture capital fund comes with stringent qualifications and minimum amounts for investment. Asset number 5. Treasury bills. Treasury bills are debt instruments issued by the government. They could have a tenure of 90, 182, or 364 days. These debt instruments are guaranteed and secure because the government never defaults. When the bills are due, you will get your money back plus the interest. The returns on treasury bills are also very reasonable. At a young age, getting regular returns from treasury bills will ensure you can retire early. Before I tell you about asset number 6, I want to know what you think about the assets I mentioned earlier in the comment section. Have you tried any of them? Also, tell me what topics you would like me to cover. I read every single comment. Asset number 6. Growth and dividend stocks. You should know that you can afford to make risky bets early because it is a learning process for you. Growth stocks are another form of high-risk, high-reward investment option in the stock market. These are stocks that have continuously outperformed the broader market in returns. On the other hand, dividend stocks are companies that pay dividends regularly to their shareholders. These companies are usually stable and mature. Their volatility, compared to growth stocks, is reduced. Therefore, their returns are lower. Include these stocks in your portfolio while you are young. Growth stocks and dividend stocks provide consistent income over the long term. Asset number 7. Exchange-traded funds or ETF. Exchange-traded funds or ETF are comparable to index funds. We talked about index funds earlier, but they consist of a broader basket of assets than just stocks and could include assets like stocks, gold, and bonds. Like stocks, you can buy and sell shares of an ETF on an exchange. In addition, you can use them to invest in broad market indices. You can, for example, invest in the S&P 500 or technology and health stocks. First Trust Natural Gas ETF, Van Eck Oil Services ETF, and Invesco Dynamic Energy Exploration and Production ETF. Each of these ETF has outperformed the S&P 500 this year by more than 50 percentage points. Asset number 8. Economic commodities. Commodities are economic goods with substantial fungibility. This means that the goods are treated equally by the market without regard to the producer. You could purchase physical raw commodities to invest in these goods. Some of these are precious metal bullion. Also, futures contracts in ETP or exchange-traded products are vehicles for investing in them. The ETP tracks particular commodity indices, but stay clear of them unless you are a sophisticated investor. Also, mutual funds have commodities in their portfolio. You can use them to have exposure to commodities. Some mutual funds own stocks in companies in a specific sector, allowing investors to buy fund units. Therefore, investors indirectly own shares of that company. Portfolio diversification, potential return, and inflation hedge are some advantages of commodity investing. Asset number 9. Annuities. An annuity pays fixed streams of regular payments to individuals who invest in them. When you start early with an annuity, you will grow wealthy and receive these streams during retirement. You can buy an annuity with premiums as a series of payments. You can also purchase them with single payments. Annuities are an excellent way to prepare for your retirement years. Most annuities can give you regular retirement income streams. Some annuities are deferred annuities. That means you use it to save for the future and the income streams come at a later time. Others are immediate annuities, meaning the insurance company starts instantly giving you the streams of payments. Fixed and variable annuities are usually popular forms of annuities. A third one is a hybrid annuity, or what is tagged as an indexed annuity. For example, they could be equity indexed annuities or fixed index annuities. You have to be conscious of the fees. Some fees are surrendered charges and administrative expenses. The commissions could also be high and could be up to 7%. So watch out for these. Asset number 10. Cryptocurrencies and initial coin offerings. Among the asset classes for young people, the latest kids on the block are cryptocurrencies and initial coin offerings. Mainstream investors are beginning to give their attention to these assets. The market is very diverse. There are more than 4,000 cryptocurrencies, and initial coin offerings can raise more than $1 billion. These assets are complex, but they give great returns. For example, some cryptocurrencies, such as Ethereum, can give you returns of 15% per year, while others, such as Axie Infinity, can provide returns of 80% per year. Initial coin offerings, or ICO, are ways for cryptocurrency creators to raise awareness of their coins and have people invest in their projects. Some investors can make returns of 1,000% on these projects. But with great returns comes high risk, so you have to be careful when dealing with crypto assets. Now, if you want to watch more videos like this, then you need to watch this video right here. This video is one of the best on this channel. You can click on this video to watch further.